Let's go to Arabile Gumede, who's standing by at the Johannesburg Stock Exchange. A very good afternoon to you, Arabile. What's happening in the markets in South Africa?
Yeah, good afternoon, Nzinga. Well, the market has certainly turned slightly positive this afternoon, and I said a little bit earlier that this is despite the fact that the market as a whole, when considering what happened out in the United States on Wall Street and out in Asia this morning, has certainly been a whole lot better than some would have expected. Where this comes from, perhaps we'll begin to unpack that just a little bit as well. The numbers out of South Africa seemingly a little more positive. We had seemingly edged above that 59,000 point mark. Things aren't necessarily looking that good anymore, having seen that risk-off trade sort of come into play for a little bit as well this week. But June has been an overall good month when you take a look at the market. But how will it fare for the remainder of it? The interesting elements here are that the oil price continues to climb and the rand perhaps trading within a narrow band between 14.30 and around 14.40 or so. So how exactly are the markets faring? Let's chat now to Viv Govender from Rand Swiss just to detail and unpack that market picture a little bit more. Viv, thank you so much for the time. Really appreciate it. Just around 0.2% uptick in the local market. It is better than how Asia did, and even better than Wall Street, of course, having a really bad day on that front. What really pushed South Africa's market a little bit better this morning?
Yeah, we are seeing a bit of a pullback on some of the resources here, and that comes true when we have the discussions around the the interest rate in the US. I do think the market had been pretty aggressive in terms of pricing cuts for the US Fed, and the turnaround had been pretty spectacular. A few months ago, it was all hikes, and then now it's all cuts. And the Federal Reserve basically came out and said, don't be quite as, aggressive on that. That being said, I do think that we are going to see the US economy slowing down a bit more than anticipated. We are seeing, even though they're not as badly affected as the Chinese, a bit of a slowdown happening in the US right now because of the trade war and other factors as well coming into play. And as we go into next year's election, I think we are going to see, more and more pressure to try and stimulate the economy just to keep things flat or, reasonably buoyant ahead of the election. So I think that's one of the factors out there that's really affecting us in South Africa.
If we take that Fed, decision to perhaps not be as aggressive when it comes to that interest rate cutting cycle, what does it mean for South Africa? I mean, we had hopes that, that would pressure the Reserve Bank to perhaps cut, even if it isn't next month, although it possibly should be, but, at some point as well throughout the rest of this year. Does that still factor in a cut for South Africa as well? Or are we probably going to see the Reserve Bank here locally decide to stay as is?
I think the Reserve Bank should cut, quite frankly. When they basically cut the target effectively from about 6% or just under 6% to 4.5%, you effectively raised real interest rates by 1.5%. We kept everything else stable. And that's obviously not suitable in a country like South Africa, which is barely growing at 1%. If you're hitting your interest rate target and inflation rate target and your growth rate is about 1% or less than 1%, depending on how things go this year, you should be probably lowering interest rates. I think if the Fed lowers, the Reserve Bank will feel some kind of ability to lower as well, but they are very sensitive to any kind of weakness in the currency. They would far rather have the currency basically stay where it is and keep interest rates where they are than to cut and then suddenly see the currency go above 15 or something against the dollar. And that's one of the reasons that we in South Africa have to be extra cautious. We can't afford to be bold if bold is being thought of as being reckless. You know what I mean?
Yeah.
We don't have that cachet in the market where our boldness is trusted. Our boldness sometimes may cause markets to think we are reckless, which can have worse effects on us than basically what we're trying to solve.
So was it bold or reckless then when we decided to hike interest rates with the hopes that the rest of the world would come on board with that and perhaps increase interest rates as well? And now that sentiment has completely fallen off and we're sort of sitting with higher interest rates, which may seem good for international investors, but harmful for consumers.
Overly cautious, I would say. We were overly cautious at that point in time. We probably should have followed what the US was doing and saying, don't just treat the words, look at the actions as well as what they were doing. I mean, the US Fed is quite famous and quite skilled because of his reputational history. Its ability to basically move markets just by saying things as opposed to actually doing things is quite remarkable. We in South Africa have to follow with actions, but I still think we should have basically followed actions, when they had to be done. Right now, I do think that we don't see much issue with regards to inflation. But that being said, the oil price we can talk about in a minute might just change things there. The impact we've had of this weaker currency over the last few months might also change trajectories going forward.
Talk about that oil price then, now rising firmly above that $65 a barrel mark. At some point, we're looking below 60. Now it just continues to go higher. Of course, yes, there's tension between Iran and the United States. Does that continue to see the price go higher?
Look, when I was about $60, $61 a barrel, I was telling people that it was virtually a free option. You can't go more than $5, say $6 below that before you start seeing real pressure coming to the shale producers in the US, and before OPEC and OPEC Plus, with Russia, etc., start to really try to look at cutting to push prices higher again. But on the other hand, the upside, pressures for oil are spectacular. I mean, we still have the Venezuela issue. We still have stuff in Libya and so on. But the real issue is, of course, Iran. And what Trump is doing there. And look, the fear I have there is I don't see what the counter to that thing. What's the pressure against him? It's not like it's North Korea, which has nuclear weapons. They're not going to be going crazy out there. If he goes and pushes them, the people that get hurt most are the people in the region, which he doesn't really care that much about. One thing he does do is push oil prices higher, which will be profitable for the U.S. producers. Remember, the U.S. is basically biggest producer of oil in the world at the moment, so higher oil prices is not bad for them as it is for places that import, like South Africa or India or China. And it might even hurt the Chinese because, they get a lot of their oil from the Middle East. So, and also it helps them ahead of the election. Strongman war. So I'm just hoping to see some kind of reasoning why, him pushing on, except for the fact he doesn't want to see U.S. soldiers die.
Of course.
That's the only thing, basically. That's the only thing. But other than that, the incentives are really in favor of him pushing this thing a bit further.
He definitely wants to look strong as well at that G20 summit, doesn't he? Especially with the Chinese and that relationship coming through between them. They have to try and sort out a deal as well this weekend.
Yeah, I mean, remember the Chinese are also going in there a bit weak as well. I don't know if you saw the pictures of the Hong Kong protests.
Yes.
Oh, they were spectacular. And I mean, also the Hong Kong guys know how to protest properly. Do you see the one where the crowd parts as the ambulance goes through?
Yes.
That shows the very peaceful protests. But the Chinese basically have made real pressure on the G20 not to mention them at all. And so they are going in, they're not just looking at economic issues, but looking at political issues as well, which might give them a bit of advantage in some areas.
Yeah. All right. Well, we'll see how the market fares with that. And Saturday is definitely a big day. We'll hopefully get some market movement from that very quickly on Monday morning. But Viv, really appreciate the time. Viv Govender is from Rand Swiss, helping us unpack that market picture a little bit more live here at the Johannesburg Stock Exchange. So perhaps a slightly better picture for the JSE thus far, 14 Rand 30 odd against the US dollar for the Rand, and a general sentiment where the market is eagerly anticipating that Saturday meeting between Xi Jinping and President Donald Trump. We'll have all of that information for you as it comes out. For now, that's where the buck stops. It's back to Nzinga at in Auckland Park, right after this.